Hi guys, David Campanile here, owner of Campanile Law, located in the state of New Jersey. We handle estate planning and probate. If you want to set up a strategy session with me, contact me at njestateattorney.com. I'd love to set up a time with you to discuss your estate planning and probate needs. So I'm going to be talking really quick today to try to get this information out to you and keep it under the 9 minutes for LinkedIn. Today we're going to discuss Joe Biden's tax proposal for estate planning. And just a caveat, this is informative. This is not about which side of the aisle or my political beliefs. This is just the review and the highlights of what potentially can happen in estate planning. So before we jump into this, we know that Congress right now is almost at a dead heat. Democrats have a small advantage in the House, and it's almost a 50-50 split in the Senate. So usually what happens when things are hotly contested like this is Congress normally doesn't do anything. So there's potential things can be done. There's potential things cannot be done. But I just wanted to go over these facts with you. So under President Biden's tax proposal, there's going to be two major tax increases on accumulated wealth, which basically is going to add to about a 61% tax on the wealth of high-earning taxpayers. However, President Biden is adding a new exemption of $1 million for an individual and $2 million for married people. This is in regards to the capital gains tax. And there's going to be a tax on unrealized capital gains worth over $1 million. So what does this mean for us? Long-term capital gains of high earners are subject to the 20% tax rate and the 3.8% net investment income tax rate when the gains are sold. Capital gains of millionaires are going to be at ordinary tax rates. Its proposed top marginal rate capital gains at 39.6%, and they're going to do away with the step-up basis. I'm going to jump into the step-up basis really quick, actually. They're also going to add this step-up of add this increase of 39.6% to the net investment income tax at 3.8%, and combined tax rate on capital gains at 43.4%. So that's where the numbers are coming from. Just to let you know, the capital gains tax rate currently is 23.8%. In addition to taxing unrealized capital gains at death at ordinary income tax rates, large estates would also be subject to the current estate tax of 40% above an exemption of the $11.7 million per person or the $23.4 million per married couple. So let's dive into what this step-up basis really means, and let's just jump in. So what is the step-up basis? First, we need to know what is the basis. So the basis is your original purchase price of an asset. So let's say you purchased the stock today for $100,000. And in a few years, you sold those stocks and you made and they sold for $250,000. You'd receive a capital gains tax on that $150,000 increase, not $250,000. You take the total sold minus your original payment, and that gives you what your tax payment's going to be. So just to let you know, for almost the last 100 years, the basis of an inherited asset is raised to the asset's fair market value at the time the original owner dies. So let's keep this example going. Let's say you're the original owner. A few decades have passed. Your stocks are worth now $500,000. So you bought them at $100,000. They've increased to $500,000. You die and pass the stock down to your child. The basis for the step up would be you'd step up now in this scenario because you're not selling the asset; it's going to your child. So you bought it at $100,000. Your child's getting it at $500,000. So your child's basis is $500,000. It's the fair market value. So your child now has the option to immediately turn around and sell that stock at $500,000 and not pay a penny in tax, a capital gains tax, because they started it at $500,000. Or your child can hold on to that stock, and hopefully it will increase. So now we've set the basis at $500,000 for the future taxes that are then calculated, saving your heirs all that money. So let's say now your child holds on to that stock for a few years, and that stock goes from $500,000 to $600,000, and they sell it at $600,000. They're only going to be taxed on that $100,000 increase, not the $500,000 increase from when you bought it at $100,000 and they're selling it at $600,000. So they're keeping that step up. So it's a smaller step up. So let's make another example, actually. And I just kind of want to paint the picture of what President Biden is actually proposing. So let's say we have Diane here. Diane is average American, based on earnings, making about $60,000. She's a school teacher living in, I don't know, let's say Texas. And her favorite uncle passes. Her uncle, in his will, left her a beautiful beachfront property, and that he purchased for $300,000, and that property is now valued at $1.8 million. And we're saying he bought this years ago. So under the current law, here's what would happen. Diane would inherit the property, and she can keep or sell the home immediately without paying anything in federal capital gains taxes. So she just inherited a home that was purchased for $300,000. Now her basis is $1.8 million. So if she were to turn around and sell that home in, let's say, 2 or 3 years, and the property went from 1.8 to 2.1 million, under current law, she'd only pay capital gains tax on that $300,000 increase. The 2.1 minus the 1.8 equals the 300,000. But under the new proposal from President Biden, let's say Diane receives this property. It was purchased for $300,000. It's now worth $1.8 million. Diane's uncle's estate would owe $500,000 in taxes on that property. Actually, Diane would, because she's inheriting it. So how do we get to this $500,000? So we're taking the original basis, that $300,000. We have 1.8. We're subtracting 300 because that was the basis. We're left with 1.5 million. But here is where President Biden's exemption of the $1 million comes in. So we deduct that exemption of $1 million for Diane. But there's still $500,000 that get to be taxed. So when Diane sees her tax bill, it's going to be almost $100,000. Now we're talking about an average American here. I don't know about you guys, but I know if I see any tax bill, I freak out. So you're talking about an average American making $60,000 is now staring a $100,000 capital gains tax bill in the face. Diane most likely is going to be forced to sell this property, even though she wants to keep it, because she has to cover that tax bill. So basically what the proposal is showing is we're going to be losing that gap, and potentially losing that gap for heirs or beneficiaries to start at a new number and not have to worry about this increase because that wasn't their increase. So remember, these are just proposals. We have no idea what Congress is going to do. So there's two options here. Sit down with your attorney and you can react to the proposal, or and discuss with your attorney all your assets, your finances, and see where you would fall under the new proposal, how your estate would work, if there's anything you need to do, like create a trust. Should you be purchasing more life insurance? Should you be gifting more things currently, just to avoid this potential increase? The other side of the coin is, hey, you know what? Let's sit back and see what Congress does. I will react to how Congress reacts to this. So those are the two options you have right now. Remember to sit down with your estate planning attorney to discuss this. This could be a drastic change if it passes Congress. But I just wanted to bring this to your attention. I wanted to break this down for people. This was kind of hidden in the American Families Plan, but it's now coming to light, and it's kind of driving estate planners a little crazy, and we're running around trying to figure out what to do and how quickly we need to get things done. So I hope you found this video informational. If you did, please hit like. If you're on Facebook, please hit the thumbs up button. Please subscribe to our YouTube channel. Follow us on Facebook. We're trying to put out content every single day. If you know somebody that needs help with estate planning or probate, share this video with them. Send them my way. Tell them you were thinking about them. Contact me at njestateattorney.com to set up your free strategy session. I'd love to sit down with them or yourself and answer any and all questions. As always, I'm David Campanile, owner of Campanile Law, located in the state of New Jersey. We handle estate planning and probate.